Welcome to Impact TV, a corporate venture video series produced by Impact Venture Capital in collaboration with the Kauffman Fellows. I'm Jack Crawford, a founding general partner at Impact Venture Capital, alongside with my colleagues from Impact, Pat Bumpus, and Kauffman co-chair Alessandro Santro. We're thrilled to welcome to the show today Bruce Niven, head of strategic venturing at Aramco. Bruce, how are you doing today?
Doing well, Jack. Thanks very much for the invite, and pleasure to be here. Hope you're doing well too.
So my partner and I just got a chance to spend a little bit of time over in the UAE and Saudi. It was an incredible experience in Dubai. We saw skydivers diving into the city and hoverboards over water from yacht to yacht. It was quite an experience. You've gone from beautiful sort of Southern California, I guess, spent some time down in LA over to Saudi. How's that been, sort of moving from one beautiful place to another?
Well, I've been here for 12 years, so I guess I wouldn't have stayed that long if I didn't, if I didn't like living here. As it happens, I kind of grew up as an expat kid and spent a lot of time in the Middle East when I was young, so kind of familiar with this region, and it wasn't such a great shock for me to move over here. But no, I think with every place in the world, there's good things and there's bad things, and as long as you appreciate the good, you can make things work anywhere. And there's things I appreciate about this part of the world, and there's a very rapid rate of change in this part of the globe right now. So it's quite an exciting place to be.
Aramco is a global corporation, well known, obviously, in your part of the world, a little less known in the US. So why don't we just provide a little bit of background? I was amazed looking at the numbers of revenues and profits, and just it's clearly an amazing company. And the size is actually quite incredible. Can you just talk a little bit about, for those who are less familiar with Aramco, a little bit of the background of the company?
Yeah, it's a company that probably is less well known than it should be, for sure. It is, the world's largest oil and gas company by a considerable distance. So Aramco is the Saudi oil company, and for the last 85 years, it's essentially had, sort of exclusive responsibility, I would say, to manage Saudi Arabia's oil and gas reserves. It's really transformed over the last few decades from originally being a kind of upstream asset manager to now being, a global integrated energy and chemicals company. A few years ago, it acquired SABIC, which is a top 5 chemicals company in the world. And so, the scale of the business is immense. It handles basically 1 in 10 barrels of oil produced on the planet. It's also a significant gas producer. It's a market cap that's close to 2 trillion. So it's right up there with, Apple and Microsoft and Google, being bumping around in that order for the last several years. So it has a huge presence within the oil and gas industry. And a tremendous role to play in the global energy system, and really in terms of kind of the energy transition, it's critical. So what Aramco does over the coming decades is really going to matter in terms of how the world addresses that issue.
Mm-hmm. What was it, the size of the company and the innovation level and maybe some of the diversity across industry sector that they're looking to engage with, that drew you from Itochu in LA to out to, was it a geographic move? Was there something else that drew you to Aramco when you first came?
I moved here really as kind of first hire in the corporate VC program in Aramco. So it was a new initiative at that time. Really, we kind of took it through the board approval and got the thing launched, back in 2012, this was. I just saw it as a fantastic opportunity to kind of take that role in what is, one of the world's biggest corporations. And through the time I've been here, my kind of goal is to, first of all, kind of grow a world-class corporate VC and venturing program within the company, but also to make that more than just a sideshow, which I think corporate VC often is, right? And to really try to use corporate VC in a very strategic way, in a way that can influence the future of the company, right? So yeah, fantastic opportunity. The program has grown substantially over the last few years. I think, that we've gained trust in the leadership here that has allowed us to do that. And, that continues to offer some really exciting opportunities and challenges.
Is there any specific lessons learned from your time leading, some U.S. corporate venture activities here in the States that applied there, or was it, really, introducing a new asset class and a new way of thinking to Aramco when you went over there?
So yeah, I mean, I'd spent 8 years in a corporate VC role based in LA before I came over here, and it was a very small group. And I think, took a lot of lessons, good and bad, from, that experience to try to design a corporate VC program that, I felt could really, perform and function. So the way that we run the show here is quite different in many ways from where I was previously. But 8 years in the VC market in California, it was a great opportunity just to kind of learn how the business works and also learn the technology landscape. I mean, I have a technical background. I'm kind of a techie by DNA, but I always and I've sort of bounced between investing in more kind of digital tech and industrial tech, which we're doing both of here at Aramco as well.
Can you provide a few more comments on sort of industry sector focus? Obviously a lot of public petroleum and natural gas history going forward. Sort of where does the corporate venture group focus from an industry sector standpoint? What does the thesis look like?
Yes, so we actually run 3 different programs, and it's now a total of $3 billion under management across those 3 programs. We started out with a $500 million fund. So the 3 programs now, last year we just launched the latest one, which is $1.5 billion, and that is focused on sustainability technologies. That really has 2 main objectives. One is to help the company achieve its net zero decarbonization ambition. So Aramco has a 2050 net zero target for its operational emissions. And secondly, to help it develop new lower carbon fuel businesses. So that's predominantly around hydrogen, ammonia, synthetic fuels, so lower carbon fuels. That's one program. The second program, which is really a continuation of our legacy fund, is now focused on what we call strategic digital technologies predominantly. So, digital solutions, whether that's enterprise software or additive manufacturing or robotics, which we believe we can deploy in the company and get operational benefit. And then the third program, which is quite unusual for a corporate, and I essentially head the first 2 of those, which is what we call strategic venturing. The third program is branded Prosperity 7. It's named after well number 7, which was the first well to strike oil in Saudi Arabia. And it really looks much more like a private deep tech VC fund. And its objective is A, financial return, and B, providing diversification opportunities for the company. So, maybe followed on by, potential M&A in future. Aramco is also, as part of its diversification strategy, in the process of developing kind of a portfolio of regional tech and industrial businesses. So that's part of the company's strategy as it goes into the next 30, 40 years with potential for peak oil. Yeah, and it really run much more like a private VC fund. We have a carry program in that team, and there doesn't have to be a direct strategic linkage with the parent, which is unusual for, I'd say, for a corporate VC.
That's great. One of the interesting things that I've seen recently as a pattern across corporate venture groups, particularly attending industry conferences like Global Corporate Venturing runs and others, is this embracing of sustainable development goals, the UN's framework, really leaning in on sustainability. I wondered if that's part of your framework. I'm seeing some corporate venture groups lean in so far as to start to color code their portfolio in line with the framework that was set up by the UN for the SDGs. Sustainability is a part of that. Obviously, there's there's other things, clean water and improved healthcare and improved education. Is that any part of your deal selection process? Does that influence your investment thesis in any way?
So I'd say that, the company as a whole has kind of embraced the UN sustainable framework in terms of its sustainability reporting as a whole. And that's a very broad framework that goes, it's much more than just kind of the, greenhouse gas issue. It goes into social responsibility and education, a whole bunch of other things. So at corporate level, that is being used. For us, as I said, we've got very specific objectives with this fund. So it's things that we can apply in the company that are going to help us reduce our operational emissions and things that can help us build new businesses. So, that's the lens through which we look at things. It's I'd say much more specific than the UN goals.
I see. As a seed stage venture fund, our firm is working to add value beyond capital constantly with entrepreneurs. I'd like to ask you a question about adding value beyond capital. I mean, we're, at the early stages, obviously, we're looking to, help build out the management team, build out the board of directors, help find early customers. Oftentimes, we've got a wide network of corporates that we're collaborating with. We're connecting them with corporates to get market insight, to establish partnerships, to enable those customers to be, those corporates to be early customers. Obviously, more and more corporate venture groups are capital sources, and eventually they're potentially acquirers. So the corporate network has become a very important part of how we're adding value beyond capital to entrepreneurs. Is there anything specific that you're doing when you're meeting with an entrepreneur, you find an investment opportunity that you're very excited about? And capital is one thing, sure, they're excited about getting capital, but is there something beyond capital that you're communicating you can provide that will add value to the startup?
Yeah, I mean, that's something we spent quite a lot of time thinking about, and also continually thinking about how we improve it. I think we very much look at the business as, how do we differentiate ourselves compared to other investors, right? So I think, as most corporate VCs, one of your key advantages inherently is you're a potential customer, right? And particularly on the strategic venturing side of the house, obviously that's actually our objective, is to become a customer. So, but it's more than just ultimately a customer. We have quite a substantial kind of R&D organization. So there's often technical collaboration, joint kind of research projects, piloting the technologies, and then ultimately moving to commercial deployment. And those are some of, we apply those metrics to our business, right? So those are some of our kind of key performance indicators, is hitting those milestones and ultimately the realized value that we get from deploying technologies. But we also take the view that we want to behave as a professional investment group. So we have a global team. We're headquartered here in Saudi. We have offices in the US, Europe, and China. And the folks in those teams, their backgrounds are kind of a mix of VC, corporate VC, consulting, iBanking, some entrepreneurs, some technical folks. And so, we've got a global team of about 70 people, and, we commonly lead rounds, which isn't always the case with corporates. We commonly take board seats. I would say in more than half the investments we do, we're either leading and or taking board seats.
That's quite active.
So
quite a change.
Yeah, we're quite active in our approach. Yeah. And then I would say, one or two other things. I mean, obviously Aramco, there is potential for tremendous additional capital, either from the company or kind of from other, parts of our network, including the Saudi network. Obviously Saudi as a whole is really betting big on the venture world, with the Vision Fund and what the Sovereign Wealth Fund is doing. And in fact, you can kind of say that the whole country is kind of taken what I would describe as quite a bold position to kind of diversify from oil and gas into tech. And kind of what we're doing in some way reflects that, particularly with the Prosperity 7 program. But yeah, I mean, I think so besides capital, we've also, the company's kind of in a unique position in the network of kind of very influential people that we can access if need be. We use that very selectively in the venture group, but we can leverage the different strengths of Aramco beyond just being a technology partner or customer as well.
It's interesting to hear about your level of engagement with these companies because, as we both know, corporate venture for a long time was sort of late rounds of financing, maybe a Series C, Series D, in a passive role. And now, over the last 5, 6 years in particular, we see corporate groups, leading rounds of financing and taking boards of directors and playing a much more active role. And clearly, you're leading the way in some of those things. Can you talk a little bit by stage, across the financing food chain? Oftentimes the traditional VC community would sort of fund the seed, the Series A, the Series B, and then sort of bring in corporates in the later stages of rounds of financing. Now it appears that many corporates are starting to sort of come upstream a little bit and get involved at the early stage, even at the seed level. Can you talk about sort of across the continuum of venture from seed and early stage to Series A, Series B, to even growth? Are you participating in all parts of that financing food chain? Where's your sweet spot?
Yeah, I mean, we are kind of stage agnostic. And actually in the sustainability fund, we've got a dedicated seed allocation. So that is kind of new for us. That's earlier than we've gone before. And it is a different ball game, right? Because you're suddenly having to really network with innovators, and scientists rather than more kind of networking in the investor community. And you have to build your brand in those communities as well. So we're working on building that. But so we can go, all the way down to kind of 500,000 tickets, and we have a dedicated program there for seed, up to kind of 50 million growth stage venture. So yeah, we really want to play in all stages. I mean, the market as a whole is kind of migrated to seed. I think that's a product of kind of the bubble bursting a little bit and valuations unwinding, and it makes it quite difficult sometimes makes later stage deals a bit messy. So the whole market has kind of moved towards the early stage a bit. So we're in that as well. I wouldn't say that we're necessarily doing it for the same reasons.
Yeah, we're seeing that as well. We've seen, we've had co-investments now with Intel, SoftBank, Yamaha, Kubota, SK Hynix, Applied Materials, and a bunch of other corporates, oftentimes at the Series A level, where they've stepped in and wanted to co-lead or take a board seat. So it's been actually fun to see what a significant part of the venture ecosystem corporates are becoming. Let's talk a little bit about geography. How do you think about sort of the US market? How do you think about the global market? How much are you investing sort of back home where you're at versus sort of in the global ecosystem? Talk a little bit about your investment thesis by geography.
Yeah, and so it does vary a little bit depending on the three programs. On the strategic venturing side, it's predominantly focused on the US and Europe, and probably in a ratio of 2 or 3 to 1. So quite heavily focused in the US. And really, the US is still the dominant technology innovator, right? There's actually a lot of technology innovation in Europe. The ecosystem is, I would say, maturing well in terms of the ability to scale in the same way that the US has been good at. And so we still definitely, participate in that market. With the Prosperity 7 fund, it's actually 50-50 focused on the US and China. So we went into China when we launched that about 4 years ago, and we have a fairly sizable team in China, about 20 people. And it's been interesting to kind of see how the ecosystem works there. I think the level of technology innovation is steadily moving upwards. In some cases, they are becoming quite competitive, I would say, at the leading edge in areas like AI or robotics. In many cases, it's application of technology that can scale very quickly in China. So it's a slightly different play. And there's all sorts of dynamics around, of course, there's the sort of decoupling of the US and China, which is causing us some interesting challenges. At the same time, we do sort of sit between the two markets geographically, and we have, for different reasons, quite strong relationships with both geographies. And in some ways, you've seen a pull back of capital, US capital in particular, coming out of China. We still are in the market, and so we're actually in quite a strong position as an investor there. So lots of things going on in terms of the US and China situation.
Are these vehicles that you're describing all dedicated funds, or are you investing off the balance sheet? One of the things that I've found interesting is that when you look at the corporate venture capital industry, you have sort of those groups that are investing off the balance sheet, those with dedicated funds. There's some hybrid models, those spinning out and trying to demonstrate their strong connection with the corporate sort of mothership, and others that are sort of they're rebranding to basically almost disassociate themselves so they can operate a little bit more independently by brand and by function. Can you talk a little bit about the vehicles that you've set up, and are they dedicated funds or investing off the balance sheet or some hybrid? Because I'm concluding that if you know one venture capital firm, if you know one corporate venture capital firm, you know one corporate venture capital firm. They seem to be taking on a variety of different flavors.
Yeah, no, I mean, I think fundamentally, if you're in corporate VC, you're always kind of in a business of bridging cultures, right? And bridging worlds. You've got to have one foot in the entrepreneurial, startup ecosystem, and you've got to have one foot at some level in, the large corporate world. And they move at very different paces. They have very different risk appetites, different ways of looking at things, and to really manage it skillfully, part of the role is to bridge that gap, right? And I think you're right that corporates do sort of take different positions on that spectrum. So you see groups like, Sapphire, which came out of SAP, which basically now is a private venture group. They've taken on third-party capital. For us, it's all Aramco capital. We have a dedicated allocation, so it's not exactly off balance sheet in that we're not doing it kind of year by year. We have a pool of capital over multiple years that's dedicated. I think it's certainly on the strategic venturing program. We have a close tie to the corporate organization. Obviously, we're the mission is to find technologies that ultimately we're looking to deploy and add value to our operation, as well as make financial return. Because of the scale of Aramco's operation, it's an opportunity to do that in a way that the strategic value that we can deliver actually outweighs the return on investment, although we still look for that. That said, we're structured as a subsidiary of the company. We have our own decision-making process that's separate from the corporate decision-making process. We do consult with the relevant business units and technical specialists pre-investment. We look to deploy post-investment, but it's a very much a sort of soft sponsorship model that we use in terms of the kind of decision-making. You'll see some corporates which almost act, as you said, independently of the corporate. You see others which, want to see a kind of firmly defined technology collaboration with the startup before they'll invest. We're kind of right in the middle. So we sort of say, okay, we have to see that this could be relevant for us. We want someone for the business to kind of agree to that statement. But we take the risk that it doesn't materialize or things go in a different direction. But we look for kind of the probability that will happen.
So just to be clear, is it a blessing from the business unit, but not a requirement? It's more of an, it's because I think I heard you say soft business unit sponsorship. Is that kind of how you think of it? Is that you want to be collaborative and work with them internally, but it's not necessarily required for an investment decision that you make?
Yeah, so I mean, I guess the way I would put it is we don't ask them for a commitment to anything. We just ask them to kind of vouch that they see that the technology is advantaged and it could provide us some advantage ultimately. Because I think because of the pace that the corporates move in kind of adopting new technology, you can't really get to a decision point in the time frame that the venture world works in, right? And so we keep ourselves relevant by doing that. But we try to kind of work on the venture world's timeframes, and it's a delicate balance.
Agility and speed, I think, are two things that corporate venture groups have gotten good at. It seems like you've dialed that in a bit, where you're leaning on the value of the business units, but they're not sort of slowing you down so much that you can't actively participate in venture investing.
Yeah, and by the way, it's still not always easy. It depends sometimes the individuals you're dealing with, the groups you're dealing with.
Is there a
Um,
little bit of at some business units, there's a little bit of not invented here syndrome, and the corporate venture groups have done a pretty good job of sort of what I would say, sort of crowdsourcing innovation from outside the four walls of the corporate headquarters and really tapping into innovation around the world. How do you feel like you're balancing that, sort of, innovation inside Aramco versus sort of crowdsourcing innovation from outside Aramco?
Yeah, so I mean, I think it's a company that's on an evolving journey. As I said, a few decades ago, it was very different from where it is now, and it's really invested a lot in its technical capabilities, which includes both its R&D organization, which is actually now one of the biggest in the industry, as well as the venturing group, which is the biggest in the oil and gas sector, at least. I don't think we really have too much of a not invented here issue. I mean, there are times where, maybe the R&D group might be working on something related or similar to a startup we're looking at. In those cases, we'll typically just go to the end user. And again, if, we're not afraid to make multiple bets selectively. It's not something that we do all the time, but we have done, whether it could be an R&D project, it could be a venture, and maybe they ultimately compete with each other, maybe they ultimately collaborate with each other. Yeah, we do that sometimes. So I think there's actually a strong appetite within the company for this innovation and for what we're doing. We generally, not always, but we generally get a fairly enthusiastic response. I think I would say that the challenge for us is more just where the company is in terms of moving from kind of development to deployment or piloting to scale deployment. And I'd say, for us at the moment, it's more of a kind of barbell strategy. So we're actually quite active in working with technologies at the early stage, helping to pilot the technologies. But the scale that Aramco deploys things at is, often 10 times what your average customer will be. So we'll quite often be a later large scale adopter than necessarily the kind of early commercial adopter. I think that, that's a challenge that we have to work with, and for good reasons that is the case, right? It kind of makes sense if you think about it.
As you build out the portfolio and invest in entrepreneurs, do you have any advice for entrepreneurs that are trying to knock on the front door of Aramco? How, as they try and sort of engage, and then they try and showcase either skills or character traits that you like to invest in. Can you provide a little bit of advice for entrepreneurs that end up watching this video and are looking for ways to engage with Aramco?
Come knock on our door. We're one of the easiest entry points, I would say, in the sense that we're on the ground in those markets. No, and I think have the right expectations with that sort of barbell approach that I said, in terms of where we're likely to kind of deliver as a customer and a partner. It's a behemoth of an organization. Doing business with any big organization, I would say, is an art in itself, right? And it's a skillful thing to do business as a startup with a big company. You have to get to understand their processes and the way that they work. You have to understand who the different stakeholders are. You have to get support at kind of the working level, as well as kind of getting executive champions. We try to help steer people through that to the extent we can. I don't think that's unique to Aramco. I think that's common to a lot of big corporates.
Let me ask a question and advice for me and the team at Impact Venture Capital and other sort of seed and early stage investors. We've, over the last few years, we've deployed between $30 and $40 million most of the time in $500,000 or $1 million check sizes into a flurry of portfolio companies. Those investments have now been followed by almost $600 million of capital from corporates around the world. So we feel like we're starting to understand by stage, by industry sector, by geography, by other thesis, what's important to corporates and work. As you sort of look back at working with the traditional VC community, seed and early stage firms like ours and others, is there a traditional way that you work with them? Are you sharing market insight? Are you sharing deal flow? How might be the best way that firms like Impact Venture Capital could collaborate with Aramco, any others that are really focused on seed and early stage that are looking to collaborate with you as a co-investor?
Yeah, I mean, we're generally take a very collaborative approach to this, both with private VC investors as well as other corporates. And even with our kind of peer group, we don't really regard ourselves as competing. We're actually here developing our supply chain predominantly. So we'll be the biggest end user, and it's usually a good thing for us if others adopt. In terms of working with the VC sector, I mean, yeah, always happy to look for deal. We're quite specific in kind of what we're going after. So I think it's always kind of helpful to sit down and kind of talk through what we're doing and why we're doing it. Always happy to look at co-investment. We do also have a very selective fund of funds program. It's a small part of the overall allocation, but we like to kind of cement relationships with people that we've built relationships with over time predominantly. But yeah, I mean, I wouldn't regard it really as too different from working with another VC firm, really, except we're from a corporate and all that entails. But in terms of how we approach it, no real different.
It's very helpful. I wanted to ask a question about sort of as you look out through the telescope and you look at technologies that excite you. Obviously, there's an amazing amount of things that are happening in the sustainability sector. There's also the whole wave around generative AI right now. We're doing more research and putting together some white papers on the corporate metaverse and sort of different from sort of the consumer version of the metaverse. There seems to be a lot of interesting things in that segment. Is there one or two technology sectors that you're sort of mesmerized by, that you're really intrigued by, that you could find yourself investing quite actively in the coming year or two?
Yeah, I mean, certainly sustainability, we know exactly what we're looking for, and there's plenty going on there. As you said, it's quite active these days, and quite strong tailwinds from the IRA and everything else, which is driving quite a lot of activity. On the strategic digital fund, again, it's more strategically driven. So we're really, more interested in solutions that add value to what we do, kind of a bit independent of what the underlying tech is. So we're looking for ways that we can improve the efficiency of our workforce, or take cost out of our supply chain, where we spend 40 billion a year or something. Yeah, Chat GPT, there's a lot of, everyone's aware, right? It's, there is interest from the business in trying to see how we can apply that kind of technology internally. And there's quite a few people that we've seen who are trying to move in that direction. We've on the Prosperity 7 side of the house, which is more the deep tech fund. I mean, we've done a lot of stuff in robotics in China. We kind of think that China will lead in high volume robotics, so we're taking positions in different subsegments there. That's been, but that's not necessarily like leading edge technology. It's competitive technology that can scale. We're taking a deeper look into, biotech, gene editing, those kind of things. We have a number of positions in emerging semiconductor technologies, optical. We have one very interesting company, which is kind of an open source semiconductor design company, or that was how they started, but it's more actually finding that they can, use that to potentially develop chipsets that could compete with the likes of AMD. Now $4 billion company. So yeah, it's pretty broad across the whole programs. Obviously, it's tech and industrial and sustainability. So yeah.
Awesome. Thanks for that. Let's see. We got about a minute left, a little more than a minute left for the rapid fire portion of the program. I'm going to ask you a couple of quick personal questions, if that's okay, with regard to professional development. You know, you're running and leading a corporate venture group for one of the largest companies in the world. Is there anything that you do to sort of optimize your professional excellence from a professional development standpoint? How do you sort of position yourself as a high-performing corporate venture investor at one of the largest global corporations in the world?
So I think I see my role. I'm kind of the bridge here. I'm sitting in Saudi Arabia, right? And our teams who are doing the bulk of the deal sourcing and interfacing with the startups are out in the field, if you like, in the US and Europe. So and we're in quite an unusual situation in that, we're headquartered in a third market, if you like, right? So, we have to kind of run it remotely. So, for me, I'm sort of I'm that bridge between our investment teams on the ground and the corporate. And, the way I kind of see my mission here is not only to execute a world-class venture program, but it's to, as I said earlier on, kind of make sure that it's relevant to the business, but also because we have a window on kind of emerging tech and innovation and that kind of culture, really using that to steer the company's overall technology strategy. So my role is, and I think this is something that's quite different if you're in a senior position in corporate VC, to the extent that you are helping to steer the overall corporate direction through your, view of the world in the VC market. And, for the company, the huge company that it is, and the importance it has in the climate system and the energy system, to have the opportunity to help steer that is actually what keeps me here.
Bruce, thanks again to you and to certainly to my colleagues, Pat Bumpus, the producer of Impact TV, and my co-chair at the Kaufman Fellows, Alessandro Santro. Thanks to everybody, in particular, thanks for allocating a little bit of time for us this morning, Bruce. I really appreciate it.